Okay, everyone. So let's yeah, it's Sherman here. So let's go look at some of the trades that I was looking at since Christmas 2018. Today is the 3rd of January. Let's go have a look. Now so you can see here, this was actually the analysis I did on this was on my mobile phone. So essentially, you're looking for a move down and another move down. Of course, if somehow price action made its way up here, then that would have been wrong. Trade would have been valid. So I think let's see what the price action did. So price action went down. It did what they call running flat. There's one possible entry. If you were scaling in, that's one possible entry you could have entered. Right, there are going to be a few entries we could have taken. This level is one of them. This breakout was one of them. When it came and consolidated, this was another one of them for it to go down. So I could actually see 3 entries. But this happened during the Asian session. I think it was around the wee hours of the morning, actually. So this continuation, here also, and this was 1, this is 2, this is 3. So this was if you had taken the sell here for it to break here, that means the stop would have to be here. Stop would have been over here. If you took this breakout, your stop would have been over here. You pick the top here, the stop would have to be above this level. Right? So let's go look at pound dollar. So let's go look at the 4 hours. So basically, this is what we are looking at. Right over here. So this was actually the move down correction, and then looking for the next wave down to break this low over here. Right. So let's go look at. So you can see there's a live chart here as well. So if let's say put this up. This one happened instead. Okay, so let's say if I click live. So basically, the idea was this one had to make a nice long corrective structure, and then once it hits the top, anyway here, if you're brave, you would sell this reaction, right? This reaction right here. But you stopped out if you just happen to plunge right up. So it's one of those things. Either you put a small sell order here, right? Or you scale in here, you scale in here, basically. This trend line over here would have changed. Okay, it would have changed. So here's one entry. Here's definitely one entry here. This was one. 3. So in the bottom here, close the trade. Because once it comes here, a lot of people will stopped out. So when people are stopped out, price could often react quite heavily. Okay. So how do I? Okay. So that was the pound dollar. Let's go have a look at. So what's going to happen now, right? Let's talk about what's going to happen now that the move has been done. Let's go look at. Something on the 15. Now, when I look at the chart, right, it's not a matter of. So forecasting is important, right? But it's more of seeing where the safe entries, where the safe entries will be. So let's say even though I can say that price action is going to come, let's say all the way down. Let's say that is the case. But if I cannot get a proper setup, let's say there is just no credit structure like that. Let's say there's no continuation pattern like that, and it just candles down like that. Even though I could make that forecast, it does not mean that I could take the trade, because the reason why credit structures are important is because this is extremely important, is because it sets up your risk reward ratio. All right, I think in different time frames you have different amount of different types of credit structures. So it's very important to know that this sets up your. This is your this is your safety net, so to speak. So when it breaks, this will be around 30 to anywhere between 15 to about 40 pips. 40 pips, maximum that you want to give yourself, right? So that's important. That's important to know that you're willing to risk so much to see if you can gain more, right? So how much are you? So the idea is, where do we think that price action is going to go? How much are you willing to risk to find it out? But does this remind us of something? Yeah, it does. It reminds us of poker. How much do you want to risk to find out what's in the guy's what's his covered card, right? His last card. So right now, let's say even if now I'm saying it's 1, 2, I have this label 3, 4, 5. Now the question is, even though I think that it could make a 3, it could make a 5, does that mean that I can just simply sell anywhere? Because there must be a place where I believe that I am wrong, right? And where is that place? Now, if you look at places like that, it's very good if price action could somehow get up there, could come down, and does something like this. If this one broke, it means that I'm willing to risk this much to find out if you can get there. And if you can often risk small, try to win big, that means you're probably doing quite well as a trader, right? If I simply sold it here simply because I think I have a forecast that it's going to come here, then, well, things can go wrong pretty quick, right? So the idea is to always wait for some kind of correction, because that sets up your risk reward. Very important. Okay. Okay. So right now, we're looking at this structure. So the time factor, it does look sideways. So what you need right now, if you're looking for one more move down, is for this one to, if it could come down, it could go up one more time. That would be the best. Something like this. Then if it was to break anything here, right? This would be a sell for one more move down. At least that stop would be above there, right? Something like this. So I can make it clearer. If you could make a move like this, that would be the best, right? So if it comes here like 1, 2, you can sell that one here. You can sell it again. Try to get this, and then the exit trade. Because why? Once you finish the third wave, the fourth wave could come, and then the fifth wave could come. Or it just does this, and then it just chop, it breaks up to over here before it drops again. So the idea is just to take it bits and pieces. The main move has already been made. So right now we're just trading. This is the main move. This was the main move, the one that we were looking at for a very long time. So this move has already been made. So right now you just try to trade what's the leftovers, basically. What's going on in these little candles is going to be spiking up and down like this, you see. So you're going to go to very low time frames, like 15, to figure out what the hell is going on inside there. Everyone's almost with the 5 minutes. Because these are all very, very small moves, right? The big move has already been done. They don't come very often, but they come like a thunderstorm. You see, like huge thunderstorm. Chuck. Right? How many pips is that? Well, I think we'll do it to at least around 50. How many pips is that? 500 pips. Let me see. All the way down. No, 378 pips. 387 pips. What is around there? It's 3,870 over points. Okay, so it's a huge move. So right now, just have to wait. Trade on the lower time frame. Let's go look at the euro dollar. This is also interesting. I find this interesting. This also made a move down. So what's going to happen now? Right. Now this move here, bigger picture for next week, I think it's going to spend some time correcting, and next week, every Thursday, it's going to make one more move down, at least to break this low. Okay, you see this one? There was the structure here, or it was broken here. So what you're interested right now is if you are trading this move up, right, and it followed by the next move down, right? This move up here, since our bias is downside, then that means if you take any buy here, it needs to be taken off quick. That means you're not expecting to go break that. Often when we try to trade the credit structure, things can go wrong very fast if this wave suddenly starts very quickly. All right. So if you want to trade this up, it's going to be done on a very low time frame. You're going to go down all the way to say around the 15. Yeah. So see, I already have pulled this trend line down this way here. See that? You're waiting for something like this, waiting for something like this. Then when it breaks, right, this will be around 30 pips or so, right? And then and at least you try to aim for that 30 pips, which is 1-to-1, or maybe slightly more, maybe 35 pips. Then you're not going to keep this. You're not going to keep this because why? You don't want to be trapped when this move starts to come down. Right. So let's say you were up in profit and suddenly you draw down all of a sudden. So you don't want that to happen. So since in the back of our mind, we think that a bigger move is down. If we take any buys, it needs to be short-lived. Even if for some reason suddenly it just goes to the top, then so be it. Just rethink again. But right now, because of this strong wave, everything here will be a correction. Looking for the next move down. That will be my bias, right? So any buy that I take will be short-lived as well. Okay. Generally, so you don't want it to be the retrace to be too deep, to be 786 or 86 levels. You want it to be something like, because if you retrace too deep, this will just be flat. It goes down immediately, right? Let's say you flip this. Let's say if you were to flip something like this, right? You could just go and then touch here and then go down. So it's not something that you want as well, right? You don't want this retrace to be too deep as well. So we have to see what happens because the move just happened very early this morning. And we have to wait for more structure to develop. More structure meaning that you want to pull back, break, so that you can buy. Okay. Right, let's go look at the DAX and some of the pound and then call it day. Let's go at the daily. Okay, so let me just pull out some 1, 2, 3, 4, potentially fifth wave. Okay, so this is where power started. Okay. Okay, so time-wise, let's see how much time it took to go up. How much time did it take? One more down, very possible on the DAX. Very possible on the DAX. So it looks like it's in the middle of a downtrend right now. Let me see. More little downtrend, yeah. That's the highest peak. So right now this is a little trend down. So we're gonna pull that first. Okay. Let's go 4 hours and see what we are getting on the 4 hours. Now, when I pull this trend down, let's say price action gets to this level. This is going to be an area of problem. Now, you could sometimes break, but suddenly you could wick and go right back in. And that also means upside, right? But right now, it's not at that level. So I'm just going to see, let me just check, see what this is all about. Because we're going to trade this as is, so looks a little bit ambiguous though. Feels a little bit ambiguous. Let me see what this is. This is one level where it wicked to, but it never. What is that? Okay. Oh, okay. In order to trade this safely, what we need to see is a sideways like this, because it's possible that this is all the move, right? So what you need is you need this goes as the first move up. You're doing for some sideways like this. It breaks, it hooks back, it goes like that. Okay, called an impulse correction. Okay, a break, a hook, and a go meaning it breaks the top. Gives you a discount, comes back here, you buy. So you're looking for this and you're looking for that, break stop. So you need a structure like this one to confirm the upside. Right, and all these little moves here allow you to set your stops below here. That means you can trade like 10 to 100 lots by entering based off this kind of 30 pip type of corrective structures. because it went out, came back. So when it broke again, this will be around 20, 30 pips. So if you had about, let's say, a 5 to 10 standard lots, right? It's the lot size is quite manageable, especially if your account is of a certain size, right? We're not talking about 10K, I'm talking about you have 50 or 100K account at least, right? So yeah. So right now, what you're waiting for is you're really waiting for this one to make some sideways. That's really what you want to do on the deck. So maybe a corrective structure down, and then we'll see whether or not impulse correction, break, go, the discount, and then you enter. Then of course you want it to go. If it's wrong, you stopped out right here, and right here. Okay. So, but what if this one just cross like this? Well, you see, you'll never have a chance because even if it goes up this way, impulse correction break, it hooked back, but it never broke the top. So basically, instead of going back up to the upside, it will just break out and then continue down. So you never have a chance to enter at all. So basically, you will not be in a losing trade, basically, right? Now, what to change my thought towards the downside? Well, it's pretty much the same thing. If I could see some, like if I see the decks, now this looks like one sharp move up, but one sharp move up doesn't mean that it's going to go up as well, right? So you always need a credit structure, regardless of whether it's going up or whether it's going down. Right? You need the credit structure. So if this one was to come down, suddenly it starts to do this stuff like this. There's an impulse correction, a break hook, and go, and then give me a discount right there. I will take that sell. Just take that sell to where, okay, two question, to where you could pull it this way, take it to the, around here, 27014. I'll take it somewhere in there. So this one, something is going to happen right here, and this will decide, will set up your risk reward, tell you which direction we're supposed to go. Right. Right now the current move is downside. So we'll need to see what the next wave is before we can decide which way this is going to go. Whether it's going to keep crawling, whether this is a correction, this is crawling down, or whether this is the first move, then there's a third move coming to the side. So price action still needs to play out. Probably let's go look at one last one. Pound yen. Okay, it fell pretty hard as well. So it looks like all the pound pairs fell. Let me just check here the pound ores. Did it fall also? Pound ores shut up. It shut up and it fell again. So pound cat dropped and went up again. Okay. So there must have been something to do with the dollar strength then. Was it? Dollar yen? Yeah, there's some kind of. So it's quite curious. So the dollar was weak. Couldn't be the dollar being weak. Otherwise, why would this have fallen? Dollar must have been. Yeah, it must have been the dollar. If was it dollar weakness and some this is dollar weakness. Why did the pound dollar go up? Man, these things would baffle me sometimes. I mean, I get the trades right, but so pretty strange. So this one yen must have been strong. Let me see. If there was yen strength, Aussie yen. Oh, there was yen strength. Okay, so yen strength, pound yen drop, dollar yen drop. So there was some yen strength going on right there. And yen strength. Okay. Anyway, let's go look at the pound yen. So what's going on here so far? Look at the daily, huh? Okay, we said to call this a 1, 2, 3. So this way there'll be internally there's a 1, 2, 3 as well. So you just gotta see what's happening between the 2 and the 3. Okay. So we gotta treat it as it is. Whatever we see, what we see is what we get. Over here we get 4 hours is 1, 2, 3, 4, 5. So now you're in the middle of some kind of fifth wave, which is always tricky. They're always tricky. 1, 2, 3, 4, 5. 5, 5, 5, 5, 5, 5. So let me just 1, 2, 3, 4. So let me just pull that this way. So what I feel, what would be a safe trade, right? It would be for price action to pull its way back up there. That will make it safe for you to sell it down to the downside. So in other words, if anything, right, if we decide to take any trade right now, it would be considered counter trend, because the bigger move would be upside, like this, and this can be very, very crazy and very choppy, and it's going to be very, very tough, because correction could be there like this, but this is also a correction. The correction could be steep, it could be sideways, and if it's sideways, there's just not much. Oops, there's just not much, right? If it was sideways like this, just you may not have much to profit from, because when you're trying to go for your, it may break and then it not go very far and it just spins back in quickly. So any trade that you entered, you could be stopped out quite easily, right? So if you're skilled at the trade counter trend, good for you, all the more power. But otherwise, you might not want to trade anymore. Just wait till the correction finishes, because after a big move like this, what comes next? Something sideways. After what big move, what comes? Something sideways. Right? After a big move comes next, something sideways. After a sharp move, something sideways. So it's something sharp, so something sideways is gonna happen. You might not want to just sit up on this for the next 1-2 weeks if you just want to be extremely safe. But if you like the challenge, right, of losing money, okay, then you just want to, you're gonna go to lower time frames and then look for something similar. This is sharp. If you go something sideways, impulse correction, a break, a hook, and a go like this, give you some discount, you buy here, you have to exit right there. But you never know if this does something like this, and then the sideways starts, right? A lot of things can happen. A lot of things can go wrong. They're not easy to trade, right? The more conservative, the easier way to trade would be stay on the higher time frame like here, less noise, wait for it to make the correction, and then look for the next move down. I think that would be safer, much safer. Okay. Those are my thoughts for now. All right, I'll just stop the recording. All right.